I think for most investors, it's not really a reason to be concerned. Whether or not it's a reason to reposition really depends on who and what you are, what you do for a living. If you're someone who answers to end clients or investors about 90-day timeframes and whether or not you are plus or minus a few hundred basis points above the S&P, then yeah, you're probably obsessing about that all day long. For the vast majority of people who are watching this now, they don't really have a lot of exposure to the 30 times sales, hyper growth, no earnings yet, SaaS software and cloud plays that we talk about a lot because they're not in the indices. They're in the Russell, they're in the Russell 1000 growth. They're not in the S&P 500. And so most people who are benchmarked to the S&P, they don't end up owning these things, at least not yet, until they become profitable and get added. And they have a lot of Tesla exposure. And yesterday, Tesla was below the price it was added to the S&P 500. So that might be like somewhat of a concern. But I think it's two parallel things happening. Most people who own assets that are benchmarked to the S&P or to a lesser extent the NASDAQ or the Dow, they're getting the benefit of the stocks that are working, even if the FANG names are taking a pause. Look at anything value, anything cyclical. Small value is roaring up 2%. Energy's on fire. Yep. These stocks are in the index. They're not gigantic, but you're definitely getting the benefit if you're diversified. And I think that's most people watching.
Shepard Smith here. Thanks for watching CNBC on YouTube.